partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the fourth segment in a multi-part securities law cast discussing reverse merger transactions. Today I will talk about determining valuation of an operating business for purposes of negotiating an equity deal in a reverse merger. For business entities with an operating history, revenue and profit margins, valuation is generally determined using a mathematical formula. For a development stage or startup venture, the necessary elements to complete a mathematical analysis simply do not exist. In that case, valuation is based on negotiation and best guess. Establishing valuation for a development stage or startup entity ultimately comes down to an investor's perception of risk versus reward. Risk is easy to determine. If I could get $300,000 cash for a controlling interest in a public vehicle today, I may lose that $300,000 by accepting equity instead. There's the risk. Reward, on the other hand, is more elusive. The reward will depend on the success and the potential and future success of the business going into the public vehicle. In determining value, thorough due diligence should be completed and consideration given to numerous factors, including, for example, investment comps. Have investors, either private or public, recently funded similar companies? And if so, on what terms and conditions and at what valuation? Market data. What is the product market? What is the size of the market? How many new players enter the market on a yearly basis, and what is their success rate? Competition. Who are the major competitors in the industry? What is their valuation? And how does this company compare to that competitor when it was at its early stage? Uniqueness of product or technology. How is the product or technology unique? Can it be easily duplicated? Can it be patented or trademarked? And are there intellectual property protections in place? Pricing and distribution strategies. What are the major impediments to successful entry into the marketplace, and what is their plan to get there? Capital investments to date and details of those capital investments. How much capital has been raised, how has it been used, and what form has it taken? Is there outstanding preferred stock, and what are the preferred terms of that stock? Are there warrants and other convertible instruments? Assets and liabilities, that's an obvious. What does the balance sheet look like? Technology risks, in addition to whether or not the technology is protected, what technologies are they relying on, and what changes in those technologies will they have to implement in order to stay competitive? Product development plans. Is there a model and samples? Have they been tested? Is there proof of concept? Have manufacturing channels been established? And what is the overall plan to bring the product to market and subsequently become a competitor in that industry? Legal documentation, and not just whether corporate records have been kept and are in order, but are all contracts and arrangements properly documented, and what do those documents say? Future financing needs. What will this company need to grow and be successful? Exit strategies. How will the current shareholders be able to sell their shares? Will they have piggyback or demand registration rights? Will they rely on Rule 144? Will there be lockup periods? Will other convertible instruments be entering the market at the same time that they will? These are all considerations. Management. To me, this is the most important consideration. Does the management team have a proven history of success, prior business experience in this and other industries? What is their work ethic, their general management skills and organization skills, their presentation skills? How will they present to other investors, to competitors, to the industry as a whole? Would they be able to present their product at a trade show? Are they coachable? Will they be able to attract others with strong credentials who believe in the business and are willing to work to make the business a success? These are all very important considerations. One other is developmental milestones. Has the company achieved the development milestones it has set to date? I'm securities attorney Laura Anthony, founding partner of Legal and Compliance. Should you have any questions about today's topic, please visit securitieslawblog.com or contact me directly. Inquiries of a technical nature are always encouraged.